you ever wondered, like, what's the best razor for your armpits?
What?
I haven't either. Sorry, that was stupid. Today, we're talking about taking advantage of Trump-induced market chaos. It's the biggest secret weapon used by all the Wall Street pros and the White House bros. They are masters at taking advantage of the chaos. If you want your portfolio to perform better, you need to be taking advantage of Trump-induced chaos also. You need to be prepared because TIMC can hit at any time. And when it does, you need to be ready to win. Welcome to 15 Minute Money, the show where I search the financial world for the most up-to-date investment ideas, market trends, and income streams so you don't have to. Let's get into it. So unless you're hiding under a rock, Trump tweeted a statement regarding Chinese export controls on rare earth metals. He also canceled his meeting in 2 weeks with President Xi and threatened massive retaliatory tariffs. China then fired back and the market fell. So what does this mean for our portfolios? More specifically, are there any plays out there that we can make money on while the world's two biggest economies fight it out? So I've been looking through the charts, looking for year-end plays to help my portfolio grow. If you're new here, my name's Nick. I'm the co-author to the Quick Start Guide to Investing, and at 42, I quit my job to live life on my own terms. I live in sunny Spain, and I live off a small dividend portfolio and weekly options trades. This channel is just a collection of all the information that I'm gathering to keep me from going back to my 9-to-5. It is not financial advice. If you need a financial advisor, go get one. If you want to be entertained while learning about the markets, stick around. So we all know that the market has been overextended, and I've been thinking for a while that the way the VIX was coiling, it was probably going to get a pop at some point in October, especially since we didn't see anything in September or August. And guess what? We got the pop. It was up 32% in one day, and that's what Tom Lee calls a buying the dip opportunity. Because Tom says that historically, when the VIX pops over 25% in one day, it is a buying opportunity because that means it's probably the bottom of the chaos. Again, we didn't get a pullback in September like I thought, and since the S&P closed negative 1% for the first time since August 1st, and it was the last time the NASDAQ had a negative 2% since April 21st, we needed a pullback. Pullbacks are healthy, especially in an upward trending market. Actually, the longer they don't happen, the more we should worry about our portfolios. And as we've been making all-time high after all-time high, a pullback may have been on the cards. The S&P 500 right now has pulled back to a predictable level, taking out October lows and sitting at a trend line. Surprisingly, the S&P 500 is very good at signaling through trend lines. When the S&P closes like it did last Friday, we typically have a negative 5% pullback in the market. And in more recent times, we've also seen a negative 10% pullback. So what am I watching for this week? I expect at least a negative 5% pullback. And in my opinion, I think that'll be a good, viable opportunity. You have to keep things in perspective. We've only had 2 corrections of at least 10% and not greater than 20% since we crawled out of the 2022 bear market. In the dot-com bull market, we had 6 such corrections before we reached the top. The stock market also averages 1 or 2 corrections of negative 10% every single year. So nobody panic. I expect some volatility in the next couple of weeks as this period is ranked 2 of the worst weeks in the stock market historically. The good news is, after October 27th, it's ranked one of the best periods in the stock market when we've had a positive May, June, and July, which we have. Let's look at this chart. So looking at this chart, the S&P 500 performance in the 12 months after May, June, and July are each positive. You see the red area, right? We've got October 12th to October 27th have not been good historically. Here we are down 23, 24, 25. We are negative 5% in 23. We're down basically flat in 24. Looks like we may be negative here in 25. However, let's look at the next line over. October 27th to January 18th, we've got a plus 10%, we got a plus 9%, we got a plus 10, we got an 11, we got a 16. Last year we had 3.2. So it's looking like we have a positive October 27th to January 18th. Now, we don't just buy randomly on the 27th. We're looking for opportunities now to be prepared for those dates. There's a Mark Twain quote that says, history doesn't always repeat itself, but it often rhymes. So we are looking for October 12th to October 27th to be a little rough, and October 27th to January 18th to cash in for us. With all that being said, now let's hop into the charts. Let's take a look at the 5 plays that I think have the best opportunity for the end of the year to take advantage of Trump-induced market chaos. First off, we got Nvidia. Let's take a look at the chart of Nvidia. We've got the Well, it currently says a 50-day, but I want to look at the 100-day moving average. It's the simple moving average, and here we are. $167 per share would bring us down to the 100-day moving average. Are we going to get there? I don't know. We are sitting, we've been dropping. We're currently pre-market today, popping up to 184, but since the tweet storm happened Friday, we are down 7.6%. If we got all the way down to the 100-day moving average, that would be 14% off your favorite stock. Now, do you think Nvidia is really just going to fall off the cliff? Their demand is, I think they've got more demand for their chip stocks than they actually are able to produce in 2026. People are buying Nvidia left and right. Sure, AMD's trying to give it a fight. Intel's trying to give it a fight, being propped up by the US government. But right now, Nvidia is the player if you want true, fast, quality AI. And I don't see that changing, certainly definitely not by the end of the year. So I think Nvidia's got a great chance to get to 200 by the end of the year this year and take advantage of some of this chaos that's been going on. So for my likelihood, I don't think it's going to get all the way down to the 100-day moving average. I think that's why I had the 50-day moving up pulled up earlier, because I think the 50 might have a shot. So let's put this at the 50-day. I mean, if it gets to the 100, I think it's a buying opportunity. Definitely, I would say anything under 170 is an opportunity. It's currently at the 50-day right now. So it could definitely see a bounce here off the 50 and may not make it all the way down to the 100-day moving average. So for me, I'd be looking at call options on Nvidia, maybe expiring January 16th. I think last time I looked, you could buy the 180 call, which is going to be slightly in the money. It was about $1,700. If it gets up to $200 by January 16th, that's going to be a good option. I also like cash secured puts here. If you've got, $18,000 lying around and you think Nvidia is a good play, you could sell a cash secured put for around $8, $9, maybe $1,000, depending on your expiration. I think I looked earlier as the Thanksgiving time expiration, and you could sell it for about $900. And I think that's what I'm going to do for Nvidia. I'm going to sell the 180 for expiring around Thanksgiving for $900 or so. All right, let's go to the next stock on our list, Oracle. Oracle's an interesting setup here. We've got this big gap from when they announced their little thing with OpenAI. They shot up from 240. Man, they wicked up to 344, $100 from a little announcement of basically people passing money around. But let's not get into this, what that is and why that might be the bubble. But they're in this downward channel right now. And you can see that they popped off the 272, basically right at the top of this gap, which is almost right at the 50-day moving average also. They're down from that wick. Right now, they're down 13%. If they get back down, even this, let's say they get to this resistance level, that's 260. That would be a 24% fall from their all-time high. I don't know. Right now, in the short term, it looks like we're definitely seeing some support at the 50-day moving average for these first two stocks. Let's look at the 100-day moving average. What happens if it falls all the way down to the 100? Well, you're looking at 240 per share. I think we'd have to see a lot more chaos for it to get to the 100-day moving average. So I think the 50 is probably your safer bet. And it's basically bouncing off the 50 right now. So if you really want to be a little safer, I would split the difference and look at maybe selling a cash secured put at the 257 level, or maybe dollar cost average into the 257 level there, because once it breaks out of this channel, it could break up, come back, test support at 300, and then off to the races back up to 350. If you know me, if you know this channel, you know that I like crypto and you know that I like Tom Lee. Tom Lee's Ethereum treasury company, Bitmine Immersion Technologies, to me, I think is going to be a big winner this year. Let me get rid of this fib channel. Let's just focus on this pennant. Obviously, when Trump tweeted, we had some market-induced chaos, and that came to cryptocurrency as well. But we are currently forming this pennant here. And pennants, you can kind of go either way, but I think it's going to hit the bottom of this pennant, spike up, maybe retest, and then off to the races. I'm hoping at least to see the 72 level but I had the fib pulled up because I was trying to see where it was going to be coming from. Let's get back to the fib in a second. Right now it's popping off the 50 MA, just like our first three. Now let's see, what does the 100-day moving average look like? It's probably going to be quite a bit further down because the stock has popped recently. Yeah, the 100 would take you down to $40 per share. I have 600 shares right now. I have a cash secure put right now. If it gets to the 40, I think I have to be another buyer, because when it went crazy, it already came down and filled this gap. That's the bottom of this channel, or the bottom of the pennant. And it came up, kind of swinging around, almost forming a cup and handle, but it's falling down. I don't know. To me, I don't think it's coming down to the 100. It's currently bouncing off the 50. Again, we're 3 for 3 right now, seeing the bounce off the 50. Is that going to hold? I don't know, because as we said, the overall market could be getting a reaction of 5 to 10% down. But I don't see Bitminer falling to 40. If it does, I'm going to be forced to be buying more of it to dollar cost average in, because I think we are looking at $70 at least by the year end on Bitminer. I believe in Tom, I believe in Ethereum, and I think it's going to be a long-term play. Let's go to the next one. My biggest holding outside of crypto in my portfolios, outside of the indexes as well. Basically, you've got the indexes, you got SPY, QQQ, then you've got my crypto holdings, and then you have Costco Wholesale Corporation. I've been dollar cost averaging into Costco for a long time. I think my average price is maybe just under $700 or so. Costco is sitting in this downward channel, as you can see. It came down close to kind of hitting the channel at 900, and I think that was probably the buying point. Costco is currently under the 100-day moving average. It's under the 200-day moving average. So if you're a long-term buyer, I think Costco is a great play. I think they have a great corporation. I think they've got great values. They've got a great CEO. They've got a great $1.50 hot dog. So Costco for the year end, I don't think that they're coming back to this 900. If they do, I will definitely be a buyer. I'm still slowly dollar cost averaging in, but in terms of a move, I think they could pop above this line, come back down and retest around the 950, and then hopefully off to the races at $1,100 by year end. All right, last play for me is a company that I don't really know how much I love. Like, I want to like Robinhood, but you've got the whole meme stock thing where they were, I think, shafting people with AMC and GameStop. And then the first Trump-induced chaos in April, when there was huge buying opportunities, when you could have bought Nvidia for like $92, I think, maybe even dipped to 89. They were having problems with their system and people weren't able to buy the dip then. And then there's reports this week that Friday, when the next round of Trump versus China chaos was happening, that people were not able to sell their cryptocurrency that they had, nor were they able to do some dip buying. So I don't know. It seems like there's definitely some issues, if you want to call them that. Or let's not get into conspiracy. There's some things going on, and as long as they don't lose public sentiment, I think they're good, because I like what they're doing with crypto. I like what they're doing with tokenization. They're trying to create platforms through tokenization, basically creating synthetics that you'll be able to buy private held companies before they're public. So like you could buy into OpenAI, you could buy into some of the really big private companies before they hit the market. I think that's going to be a huge opportunity if Robinhood can pull that off and they don't lose public sentiment, because it seems like they keep shafting people every time there's a really huge opportunity. But looking at the chart, we've got this daily fair value gap right here, and that seems like it's tapping into that gap right now. If it got through to half of that gap, you'd be looking at a potential purchase price of 130. If it falls below that, down into the 100, you also have this daily air gap, which gaps on stocks like to get filled, both on the bottom and on the top. So it's possible. I mean, it's definitely not out of the equation that Robinhood could maybe fall more than some of these other stocks we've looked, that it might come down, fill this gap, that would then be bouncing around the 100-day moving average, and that's going to be about $100 to $108 per share. That would be a pretty big fall from their all-time highs. If it fell down to 108-ish, you're looking at a 30% drop on Robinhood. To me, that is a no-brainer. I think in the midst of the 128 to 130 is a good buy. If it gets down to 100, 108, I think it's definitely a buy for me. So those are my current strategies. Those are my current plays. I was in some long options positions on Bitminer, some call options on Bitminer as well as Uber. I closed those out. I'm getting out of some of the short-term stuff because when you're buying call options, you have to be right sooner than later. And those options were expiring around Halloween. With all the chaos and the VIX spiking, I saw that those things were dropping a bit. Decided, hey, I'm just going to close out. I'm going to get some of my money back. I took a little bit of a loss on each one, and that happens when you're trading short term, when you're trying to make money on a weekly or monthly basis. You're going to be wrong sometimes. You just have to be more right than you are wrong. So I'm out of those short-term positions right now. I'm focusing on these 5 stocks to see what I can squeeze out of them, see the great opportunities for the end of the year. And as always, I'm always looking for new cash secured puts and new dollar cost averaging positions on stocks that I want to own. And these 5 hit that mark for me. If you like these types of videos, if you want to join in, you want to learn alongside me as I'm learning every single week, hit that like, hit that subscribe, and I'll see you here every single week. Thanks for joining me. We'll see you then. Thanks for joining me today on 15 Minute Money, the show where I search the financial world for the most up-to-date investment ideas, market trends, and income streams so you don't have to. I'm your host, Nick Bradley. We'll see you next week.